All right, so a lot going on today. Chair Powell did not disappoint. He brought the thunder at the FOMC meeting and conference today answering questions. So we got the 75 basis point rate hike, and he indicated the next meeting we're going to see the same thing, although they are going to be nimble and humble and look at the data. So they are trying to regain their credibility that they're not completely blind. They did admit that they missed the inflation in terms of their outlook previously, but they are paying closer attention moving forward, and they are sensitive to what's going on. And they said the words, "We have to destroy demand." The only thing they can do is control demand to bring inflation down. So they're going to definitely looking at a minimal rate hike of 75 basis points. We do know and can expect inflation to come in a little bit hotter for June. So when they see the June print in July for inflation, it should definitely be higher than May. So that would lead the Fed to possibly even consider a 100 basis point rate hike. So I have to wait till we get there, and they will leak that just like they did this time so the markets can prepare, so there's not a big unwinding. And this is the soft landing. So they leaked that information the other day about the 75 basis point rate hike to let the markets prepare so that they can land the plane softly. That's what a soft landing means, is they want to control the unwinding of the asset repricing and demand destruction and devaluation that's going on in assets, because that's just what needs to happen in order for inflation to get under control. As we know, bonds are still reacting aggressively to all of this. And, bond rates the 10-year is up, and that's affecting interest rates. Interest rates are in the housing market. Mortgage rates are now over 6%. So that's going to cool off the housing market extremely fast. And if you're watching Zillow, I've been paying attention to my market. We're seeing some crazy price reductions out there. It's really interesting. Inventory stacking up every day. Days on market's going up. The summer season is slow in the housing market anyways. So a lot of interesting things there. But the Fed delivered. They're trying to regain their credibility and show that they are not out of touch with reality, and that they understand that they missed the boat, and they're going to try to catch up as fast as they can. They did say that they see a slowing economy, a strong labor market. They feel like the market, even though the economy is slowing slightly, they still think it's strong enough to withstand rate hikes. So what does that mean? So we got a bounce in markets today. A little disappointing. I was thinking we were going to get a little bigger bounce because of the last time than we received today. This is Bitcoin right here, but let's take a look at the markets, because we looked at the last couple of videos what happened, and here was May 4th, and the markets had the Dow had 3% bounce the last time the Fed raised rates. Now they only raised 50 basis points. Let's see, this is the NASDAQ had a 5% bounce, and S&P I think was about the same thing. S&P bounced 3 to 4%, so 4 to 5%. Last time the Fed raised rates 50 basis points last month. Today, we're basically only up 1% on Dow, 1.5 on the S&P, and 2.5 on the NASDAQ. So a little bit less excited about this move than last time, but then you see what happened afterwards. So this was it right here, had that hike, and then, the markets dropped. Traditional markets dropped basically 10% after that. So let's take a look at Bitcoin, because the same thing happened with Bitcoin, right? Here is May the 4th right here. Oh, wait, that's June. Here's May the 4th right here. So Bitcoin bounced 6.5%, so a little stronger than the markets, which is usually the case, right? The bounces are bigger and the drops are bigger. So 7% on Ethereum in terms of the bounce on May 4th, but let's look at the drop. So the drop from the peak to the trough here was about 36%. That was a big drop. Our recent drop from peak to trough that we just saw was again 36%. So the question is, we saw a little bit of bounce because Bitcoin was down. It bounced basically 9% today so far. Obviously the day's not over, still kind of winding, ranging in here right now. So the question is, what is going to happen moving forward next week? Are we going to see another drop from here, another level down? So just like we saw last time, and if that's the case, if we go, let's say it settles out around the top of the range at 22.3, and we drop, Bitcoin drops another 30 to 36%. I mean, that's 15,000 over the next week. So the real question is, and what is that? What is that for Ethereum? Let's take a look at Ethereum. May the 4th was right here. So Ethereum, same thing, dropped 42% on the first round. And this recent leg down here in preparation of this move today, 45%. So two consistent drops. So let's see what happens if Ethereum drops 45% from here. If it follows suit, just what it's been doing, that's $600. So these are some ranges that we've been targeting. There's a lot of technical confluence for those ranges that have been showing these levels that are in play. And definitely if Ethereum breaks that $1,000 level, then you're looking at next stop around 600, somewhere around that $600, $700 range, and, ultimately down to that $400 range. So right now, based on what happened last time, and then we have more rate hikes to look forward to, that's really the real potential that's on the table right now. As you can see, some more unwinding, continuation of the bear market, getting back down on Ethereum to those $400, $500 levels. Potentially, I'm not saying it's going to happen. I'm just saying that's what happened last time in terms of the percentage of the drops in these levels that we're kind of unwinding. And Bitcoin's kind of in the same boat. If Bitcoin loses 20,000, really it's 19,000, right? It's 19,800. Let's zoom in over here and look at that stop right in this area of the previous all-time high. That's what we're really looking at right here. So we'll look at that previous all-time high, which everybody's talking about, 19,800. Yeah, so 19,800. So if Bitcoin loses that range, that $19,800 range, then your next stop is below that. A little bit of bumpiness around 15.8, but then you're back down around that, $12,000 range, $12,000 to $14,000 range, $13,000 range. So that is not too far off right now when you look at what's happening here and you take into consideration the moves in the Fed and the response ahead. So the markets are unwinding slowly ahead of these Fed moves. So basically this was, let's look at this here. If you look at May 4th and, start back in this area and go back, a month ahead of that, I mean, this whole area here, it took basically from the end of March till the beginning of May. So basically a couple of months working its way down. This move here was, May 4th through June. So, a month working its way down to this level here. So this is something that could happen over the next month or so. Could range sideways here a little bit and then work its way down, or it could do like it did last time. And, it could just have that drop, right after this. So what you have to expect right now, based on technicals, based on what's going on, based on the economic environment, the Fed, knowing that they have to raise rates again, knowing that they're going to unload the balance sheet, because he did say we're going to continue to unwind the balance sheet. We're going to raise rates. We're going to fight this situation. We know what's going on. They know what they have to do, because if they don't, the opposite will do more damage than what they're doing right now, believe it or not. This is a controlled unwinding. And the more they do now, the more they can undo later, but there's more downside to come. So the real question is Bitcoin going to be able to hold off at these levels? And it's not looking like it. So it's not looking like it's going to hold these levels. So we'll just have to, see what happens. And let's take a look at this, because I know the 200-week moving average is top of conversation. And right now, Bitcoin has lost the 200-week moving average, which it's done in the past. This is just as it breaks, like we've been tracking, every time it breaks the 100, it goes down to the 200. And in the past, it's wicked below and then found support and rebounded. But again, very different environment. This was a Fed put environment where it was zero interest rate, money coming into the system, and no inflation. So right now, you have to expect that this is going to continue down further and potentially look like some of these areas in the past, like 2014, where the price, stayed below the 200-week moving average for a little bit of time. And over here, even still, that was a different economic environment then. And let's just look at what that looks like to get down to those levels that we're talking about. So from right here down to 14,000, again, if it dropped, let's just look at 15,000. It's a round number. If it dropped 30%, so where have we seen that before? I think if we go back to the pandemic and look at that, price did wick down 30% below there. And if you go back to 2014, I think price wicked down about 25%, I think it was. Well, it's about 30%. So it has done it in the past. It was a wick. It didn't last, meaning, it closed down for some days, but it didn't stay down, any real length of time. And if we go back See, this is it right here during the pandemic. It was that big drop down, and then it, stayed several days underneath that 200-week moving average, back here in this area here in 2018, stayed below there for a little while. This is 200-day. I'm sorry, it's not 200-week. That's the 200-day. So go back to the weekly here, but it was just, a matter of a few days that it stayed back in that area. So here's Bitcoin on the hourly here, kind of danced around, and it could range in this area for a while, then drop. But last time the Fed raised rates on May the 4th, it just dropped really for the next week afterwards in traditional markets and Bitcoin and crypto markets. So we'll just have to wait and see what that looks like on the daily. The other thing we've been tracking is the Bitcoin hash ribbon indicator, the capitulation signal, and ultimately looking for the buy signal to come in once capitulation is done. And as you can see, this gap is narrowing a little bit because you have a little bit of up action here versus widening. And if you look at the last time we had that signal, basically you can see the same thing where, kind of looks like this area right here, right? Where you had the gap widens a little bit and then narrows, and then it went down and just continues to widen as the capitulation continues to the bottom, and then rounds out, comes back together again. So we'll just have to wait and see. The other thing to think about too is, when you're looking at RSI, a lot of people are talking about RSI at these lower levels, and in terms of price being oversold. I mean, you can be oversold for a long time and still continue down. So that doesn't really mean anything. It just means that you're oversold, and it's it follows price action anyways. When you look at the RSI relative strength, things like that, basically following price action. And if you look at bear markets and traditional markets, if you look at bear markets in past and crypto, it just stays oversold until it reverses. And right now you need market conditions for a reversal, and there's nothing to reverse the markets right now. In fact, there's more contagion out there. If you've been following the news, in addition to everything that's going on here with just current price action, the big thing is 3AC, Celsius, all these different things that's happening right now in the crypto market with, liquidations and things like that. And if price drops and, other leverage players are forced to liquidate, it can be really tough, for the space in general. It can put more pressure. And then you have, bottom talk, you have Raoul Pal, Scaramucci, Novogratz, everybody kind of chiming in, Arthur Hayes, on where the bottom is, what's going on. Arthur Hayes, obviously saying there's, more downside coming. Raoul Pal, Scaramucci obviously say this is the best time to buy, and price is just going to, continue on from here. And, you have to make those decisions for yourself based on history. Bitcoin is not going anywhere. It's not going to go away. These are cycles. This is a very different cycle. So the question here is, when will it come back? How long will it be down? How much further does it have to go? When will it come back? How long will that take? And how high will it go without the liquidity in the system and without the Fed? Very different environment right now. And those are the factors that we're dealing with right now. It's the reality of the situation. So we don't know where price is going to go to. And until we see how far it goes, then we'll know how far it can come back. And, we've got nice little ranges in the interim. So you just really have to, understand your business model and your plan, and, make your own decisions, and just kind of be careful, what kind of information you're following and listening to, because, a lot of people, some of those same people said this was your last chance right here to buy, to buy crypto at 48,000, that, you would never be able to buy below 50,000 again. Then some people said you'd never be able to buy below 40,000 again. You'd never be able to buy below 30,000 again. A lot of people are saying that Bitcoin will never go below its previous all-time high after setting a new all-time high. So a lot of these things are being tested right now, just like a lot of people say that technical analysis is not useful or doesn't work with cryptocurrency and Bitcoin. And, but those are the same people that will say Bitcoin will never go below its previous all-time high, or that Bitcoin will never go below 50,000. Those are technical levels. They're actually people that say technical analysis doesn't work are quoting technical analysis, because what is technical analysis? It charts price action, which is based on human psychology. So that's all technical analysis really is. And if you turn the noise off and you just look at it, you can see that you're basically charting price action. That's really what this is, which is human psychology. And you can kind of get a real, nice look at what price is doing in the long run. Let's turn off the logarithmic and you can look even better. And you can kind of see how, Bitcoin's just blowing through these levels, this little hiccup here. This is your next level here. And then you're back down here when you turn all the noise off. So you can just kind of see it unwinding this whole move, which is what it's done pretty much every time in the past. Just like, one of the other things that people will quote in the space, is that it always draws down 80%. Bitcoin draws down 80%, altcoins 95% plus or minus. That's a technical measurement of price action. So technical analysis is nothing more than charting price action, which is based on human psychology. Buyers and sellers, top levels, that's a technical level. Bottoms, that's technical levels. And then price action in between, support, resistance, those are all just technical levels. So what this does is it gives you the ability to chart history so that you can base an informed opinion about what the potential probabilities of future outcomes are. And then you have to look at the macro environment like we've been talking about. There was a theory or consensus or narrative in the space that the macro environment didn't matter when it came to crypto. And I think at the end of the day, what everybody's realizing is and has learned here in the last year or 6 months is that Bitcoin is a risk asset, Ethereum and altcoins are risk assets. Bitcoin is basically like gold. It's digital property. It's a digital gold. So it's a little different because it doesn't have a fundamental, basis underneath of it like a company. It's purely speculative. It's worth whatever somebody's willing to pay. And it takes more buyers to come into the space and less sellers to drive the price. And it really has nothing to do with supply because, it's infinitely divisible or, there'll be 21 million tokens, but you can divide them up into Satoshi. So there's always going to be sellers. There's always going to be liquidity. The space is always going to be moving. So it takes new capital in the space to drive the price. And that's why you have these cycles, because people accumulate here as price gets driven up, people buy in, then price sells, people get burnt, they lose their money, and they see these price fluctuations and they just get turned off, get out of the space. So it takes time for all that to work out and for new people to enter the space, new capital to enter space to drive price and ultimately get back. So that's these cycles basically of what's going on. And, as far as the altcoins, Ethereum and altcoins, they're basically securities because some of these are companies, businesses, projects that are issuing tokens to fund the business and to, transact on their networks. So, that's basically a stock. That's basically a security. It's not based on the earnings of the project or the company or the protocol, but it's still used in that regard. And then you have DeFi, and we're seeing what's going on there. Those are definitely securities where they're offering a return when you don't have any effort. You just staking your either your money or your crypto there, and then you get a return on that. And that is a security. That's just what that is. So we're going to see regulation enter the space, and we are going to see more scrutiny on the space. But ultimately, that brings in more capital to the space, and which will ultimately drive the value of these assets once they unwind. So the things that you can't ignore, and I think this is a good thing because people are realizing you can't ignore the technicals, you can't ignore the macroeconomic environment, and you can't ignore the other things that are going on in the space. You got to kind of watch the whole picture because it's a very different environment at these price levels. It's not like you're buying Bitcoin for $1 and you can throw $1,000 into it and ignore it and then wake up one day and it's at 20, 30, $50,000. Those days are gone. It's very different when you're spending $20,000. You can't just buy that, close your eyes and wake up one day and it's going to be at $1 million. That's just not realistic. And that's not probable given the current economic environment right now. It just isn't. That's just not reality. 10 years from now, 20 years from now, who knows? Next year, nobody knows. Even the Fed said today, Chair Powell, he said, we don't know what the economic environment's going to look like a year from now. Nobody does. And that's a true factual statement. We don't know. As we know, wars can break out. Pandemics can break out. Financial contagion can happen, as we're seeing in the crypto space. If Tether collapses, if USDC collapses, or if a major exchange collapses, then you're going to see the market collapse and you're going to see Bitcoin go back down to $3,000. That is a fact. You will see that happen just like we did in the pandemic. but nobody knows if that's going to happen or when. That's just, obviously it's a risk asset. So there's risks in being in the asset. So you've got to pay attention to these things because that's the kind of stuff that can happen. You have to have a plan for it, prepare for it. The good news is it has always come back in the past. The thing that we don't know in this environment is where it will come back to once it goes to where it's going to go. So that's what we got to watch. That's what I'm going to help you keep an eye on. And these are the things that I'm looking at in the way I process the space and the investment thesis right now. So as we evolve and as the space evolves and as the economy evolves, all we can do is watch it day to day and keep an eye on the macroeconomic environment and events that shape the fundamentals out there in terms of the capital, which is what it's all about, entering and exiting the space to be able to make those determinations and those decisions about what's going to happen and what we're going to do. So these are the things I'm looking at, and I will see you on the next video.